Hello traders, Gary Wagner here just after 10:30 in Honolulu, 4:30 in New York. It is Wednesday, May 18, 2016, and we're looking at the Dow Jones Industrial Average in settlement, settling in essence unchanged after having a wild swing and gyrations throughout the day, 17,526. That appears to be settlement, and that only puts it off about 3 1/3 point in terms of percentages, 0.02%. So when we look at our Standard & Poor's, that in essence did close unchanged, 2043 now, low 2030, high 2057. So as you can see, a tremendous range on the day. Of course, Fed minutes released, a June interest rate hike is still possible, and that's what sent all of these markets into wild gyrations. So traders, obviously, statements or minutes from the Fed meeting today have really sent the markets overall into a tremendous volatile state. Standard & Poor's, as we said, are closing unchanged. The real story isn't the fact of settlement where it closed. It's really the high, which was 2057 on the high, and the low 2030. So almost a 30-point spread between the high and the low on today's markets, only to see it closed in essence unchanged. Now, we're looking at a daily chart. As I said, the market closed at about 43. This is showing settlement at about 41. It's still got to update. But nonetheless, there are a couple of critical factors that we can extrude from what we're looking at. And that's, first of all, when we consider that over the last 2 days, we now have these effective closes under our 50-day moving average. That bears some bearish sentiment in the market. Now, of course, if we have an extreme bearish sentiment in the market and we do see the market go under pressure, do you really think we will see the Federal Reserve go ahead and raise interest rates in June? I personally think not, but the minutes came as a surprise to the majority of the traders that had pretty much baked into current pricing structure that there really wouldn't be any kind of a interest rate hike this early in June. That obviously is not off the table. Now, the real story in today's action, of course, has got to be the dollar. And let's go ahead and pull up a dollar chart. I've just gone ahead and done that. The dollar right now, 95.17, up 0.66%, 63-point rise in the market. On this daily chart, you can absolutely see the tremendous upside surge that it had today. And we have been noting over the last couple of days, although the dollar hit this tremendous support at 92. And from there, we saw it really effectively over a week, almost a week and a half in trading, move pretty much in a linear line to the upside, small correction in the market, then the market clips up again, and then what we talked about over the last couple of days was the fact that we had this market consolidating. And of course, we mentioned the fact that a market consolidating can be an indication of a key reversal that is imminent, or it can simply be a rest area, an area in which the market consolidates before returning to the prior trend, which is what we have seen. So we had 2 days of consolidation, and then we had the gold market really clip up. Now, here's what I find interesting. I think that we do have some resistance between 95 and call it 95.30, 95.40. And the market right now is sitting at 95.17. Let me go ahead and straighten this line out a little bit. But you have these series of tops here. You have this top here. And so my belief is that we could, in fact, see this market find some resistance in this particular area. But this is all rumor driven at this point, because if the anticipation is that there will be an interest rate hike, that is absolutely going to be supportive of the dollar. We believe that that is not going to be how that unfolds. In other words, an interest rate hike may be on the table, but it's our belief that it won't be implemented in June. If we're wrong, all bets are off, obviously. But for right now, that is our current take. take. So we want to take a look at the Standard & Poor's to see if it is going to continue under pressure. That's what I said on Friday's show, that I thought we would see it. And then, of course, we had the market rise the other day, which kind of put all of that into a murky kind of a cloud as to whether or not that's how we would see it unfold. It seems a little bit clearer to me that we will see the Standard & Poor's and U.S. equities fall under some pressure this week. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.